Hello, everyone, and welcome to another edition of the Smart Investor Show, where smart investors get their up to date price analysis and market information. Well, very interesting day in the markets, and I have received a lot of emails and calls from folks who are just a bit skeptical and a bit wary of where the markets are going and what's happening in the markets. As you all know, there is some geopolitical news out there about North Korea, and the tensions are ratcheting up, and it supposedly has the market spooked. I still maintain that this market it was overstretched, and it was due for a correction sometime soon. So that uh, I think sometimes there are crises, and the market looks for just about any reason to sell off, and that is, I believe, that is what I'm seeing, or I see now. Now the question is, will we receive follow through selling tomorrow or the next day, and that is would be the true measure. There are some support and resistance points that we're going to speak about. We're going to also speak about the recommendation folks have about buying gold. We'll take a further analysis of gold to see what is happening in the gold market, and just what you can do in case the market turns down and turns down rapidly. Okay, so just to summarize, the Dow was down 204 points. We had a sell off in the markets, and the sell off actually accelerated in the last couple of minutes. If you take a look at this 50-minute chart, you see in the last hour or so of the opening, the markets really sold off very, very strongly and very aggressively. The Dow was down 204. The S&P 500 had a stronger move down. Actually, the Dow was outperforming the other indices. The S&P 500 was down 35 points, or 1.45%, while the Dow was down 204, or 0.93%. The Nasdaq was hit the hardest, down 2.13%, and 135.46 points. The VIX spiked up. Yesterday we saw the VIX around 12 or so. The VIX really accelerated to the upside. And let me just bring up a chart of the VIX. As you can see from this chart, the VIX really accelerated to the upside, and I closed around the 16 mark. Just to put that in context, looking at the weekly chart of the VIX and what's happening with the VIX, we see that the market was at a low point around 10. 2 weeks ago it was dipping around 9, and we have almost doubled the VIX to the 16 mark. So there is some fear in the market at this point in time. Investors are getting panicky, especially with the geopolitical risk. And I noticed that anytime a market sell off, there is always some sort of risk out there. There's always some sort of crisis, whether it's economic, company crisis, terrorism crisis, political crisis. There's always a crisis, and that's why it's important to safeguard your portfolio and prepare your portfolio for these crises. Now, how the overarching question that I received today from investors, some of who were a bit panicky because they have seen their portfolios really increase over the last couple of years. The overarching question is what to do at this point in time. What should I do now? Well, the answer is, just because we have a down day in the market, that doesn't mean that the market will collapse tomorrow morning. What I would recommend is place your stops tightly. Uh, place your stops tightly around your different stocks. For example, let's take a look at Apple. Apple made a new high over the last couple of days. Apple is down to 155.27. Would I exit this stock at this point in time if I've been holding it for long term? No, I would not be exiting this stock at this time. What I would be doing, especially let's say we got in at a 105 region, or even if you got in at 130, what I'll be doing is bringing my stops closer behind the market and around the 145 region or so. Bring the stops in so that if the market does sell off, at least you have booked some profit. Because if you have entered at 105 or even 130 and you can take some profit out of the market, let the market collapse if it does, and then if it starts to recover, you can find a point to get back in the markets. And that's how we invest in the markets. This is not day trading. This is not being in and out of the market. If you got in at the 130 level, that was all the way back in February. We're in August now. So you have at least held that on for a couple of months. There are folks who were in Apple from 2009, 2010 in the $40 region. So just because we have a down day and we see tensions ratcheting up, that does not automatically mean you should sell all your stocks. It definitely means you should be wary at this point in time. Okay, looking at the, I believe we spoke about the Dow, but we didn't really look at the Dow Jones Industrial Average. Let's look on the futures Dow Mini. As you can see, a down day in the market, and this was right after the market made new highs just this week. Okay, that is the Dow. Now I would say support in the Dow is around the 21,400, and resistance is at the old high 2281. So around the 21,400 we have some short-term support in this market. And look at how this market is overextended. The dip in November, as I said yesterday, and look, the market has gone straight up. Markets don't normally just go straight up. As you can see, it will go up, come back down, go up, come back down, go up, come back down. So it is due for some sort of at least a minor correction at this point in time. Now taking a look at the US dollar index, because normally when these crisis situations occur, the dollar sometimes gain ground. But what we saw was a slight sell-off in the value of the dollar today. The US dollar index closed at 93.37, down slightly. There wasn't really much movement in either the euro, the British pound today. And what we saw, it was a huge movement in the value of gold. And we're going to take a look at gold shortly. But the US dollar index was down to 93.37. Taking a look at the euro currency, the euro was up slightly at 117.92. Looking at the British pound was actually down on the day at 129.95. But the Japanese yen was up fairly strongly, closing in at the 91.72 level. And this is what we normally see, folks. Anytime there is a crisis, we normally see a strengthening Japanese yen. In the 2008 financial crisis and sell-off, we saw the yen strengthen fairly significantly. And the reason for that is that the yen is considered a safe haven currency. Kind of counterintuitive, because if you are having issues over in Asia, where North Korea is very close to Japan, why would that be considered a safe haven currency? But that is what the market does, and it's for us to follow what the market is doing. This was the behavior of the yen in 2008. This was the 2008 financial crisis. We saw the yen strengthen fairly significantly against the major currencies, and it ushered in a huge uptrend in the value of the yen. So anytime there is crisis, the Japanese yen is a safe haven play. It doesn't really get much attention from the media. That's why you listen to shows like this, because what we're pointing out is some of the hidden and the stealth moves that can be made in the markets. Looking at gold, and in the intro we spoke about gold. Now gold, let me just clean up this chart a little bit. Gold, as I said, and I have been saying over the last couple of months, is very promising. The market made a low here in October, November of 2015, rose in 2016, came down, and I believe it is consolidating and it's trying to break out of this triangular pattern. If we do get a sustained break in gold, whether it's because of North Korean crisis or whatever, if we see the market closing above the 1200 region, that would be bullish for gold, and we could see a fairly strong move to the upside. So I am positive on gold. The price action so far is promising, but we have to clear the hurdle around the 1300 mark, and then I'll be even more bullish if we can close above that level. So this is a market I'm keeping an eye out on, and I will definitely be looking at gold, the gold sector, and gold stocks in case the market really does take off. How can you get involved in gold? No, you don't have to just buy the metal. You can buy ETFs, you can buy stocks in the gold sector. There are a number of ways you can get involved in gold. You can be involved in a commodity fund, or you can also be involved or buy the individual gold shares. So gold, and I know the media speaks about gold, and it is popular to speak about gold, that gold is going to go up. But there's a time to buy everything. Gold over the last couple of years, I would say between 2011 and 2015, was in a bear market. Now, I saw advertisements on television to buy gold. I would never recommend you buy gold when you are in a strong bear market. And this was a period in 2011, 2015. Huge downtrend in the market, and folks were advocating to buy into this downtrend. That is a no-no. And that is not smart. That's not smart investing. Smart investing is waiting, letting the market show you that it is exhibiting some positive price action. The series of lower highs, lower lows. So this is a low. Market just kept going lower and lower. Lower highs, lower lows. This is what we call a downtrend. That series of lower highs, lower lows was broken. And that's why I'm more positive on gold. It was broken here. Market came down. So this high, this low here was higher than this low. And if we do break out and can make a higher high above this high, and the market starts to exhibit this series of higher highs, that now is a bullish pattern, and that is when it is good to get involved with gold, not when we are seeing this. Rule number one, and anybody who listens to Smart Investors, so buy assets that are going upward, that are trending, or about to break out to the upside. Now let's just take a look on some other stocks. For example, we had a huge sell off in the value of the Dow. Let's look at Amazon. Amazon has sold off sharply over the last couple of days, and I'll be looking, if this market closes below, as I said the other day, around, if it takes out this low, I'll be looking to book some profits on this stock and letting the selling pressure abate itself. So if it closes below 910, 920, This is what my system is telling me. If it closed below 910, 920, then I'll be out of this stock. The system has stated or indicated a buy on Amazon or multiple buys in this stock, and this has been just a beautiful uptrend. But as with every uptrend, there could be a time to exit that trend. So Amazon closes below 910 or so, I'll be looking to book profits on that stock. Looking on Facebook, that was a stock that was beaten down when it just came out. I remember folks were saying it is foolhardy to buy Facebook stock. And I remember actually buying some of Facebook stock myself when the IPO came out. I don't normally buy IPOs, but I bought a small position in Facebook when the IPO came out and the market collapsed. Actually bought it around, I believe it was around the $36 region or so. The market went down. I got stopped out at $30. The market kept going down to 18, and then a buy signal was generated in Facebook at 36 again, and we have essentially rode that up ever since then. But that is the past, and now Facebook is at $167. Nice move to the upside. This is an example of an uptrending stock. This is an example of something that I will be inclined to buy. Higher highs, higher lows. Now the market is dipping back down. I would say if we close below the 155 region, I'll be looking to exit Facebook and book some profits. So even though the Dow is down, some of the popular stocks are still holding up fairly nicely. Now, yesterday I spoke about the Momo. We highlighted Momo. I was taking a look at it today. Market is down, and as I said yesterday, if we close below the $35 region, I'll be looking to exit the market and take some profits on that position. Another of the stocks we spoke about yesterday was Zion Corp. Okay, market stock sold off slightly, but this is still in. If I was long this stock, I would still be holding on to this position. Haven't gotten an exit signal just yet. So a lot of the individual stocks out there, even though the markets are down and the indices are down, I would say I have not received any inclination to sell. At this point in time, what I'll be looking for, and some of my ETF Profit members will be looking to buy if we do get a signal in the next couple of 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 sessions, is the Japanese yen ETF. That could rise significantly, especially if we start to see a sell off in the markets and folks kind of tend towards this safe haven play. So that is something, that's a freebie I will give you here as something I'll be looking to enter. I'll be looking at it very closely in the next couple of sessions. So it kind of acts as an insurance against a decline in market if you have some stocks, and that is the way you have to just look on the markets. That's the way you have to invest in the markets. Just because the markets are down, don't get caught flat-footed. Have a plan. Have an exit strategy. If things turn around and buyers start to come back in the market, have a strategy to re-enter the market. This is not day trading we're speaking about. We're just speaking about managing a portfolio properly and managing your affairs effectively. Because those of you who pay attention to what the markets are doing will be the ones who will ultimately make profits, and have a portfolio that's performing for you, as opposed to a portfolio that is not performing for you. So so it will be interesting to see what is happening tomorrow. But just to summarize, the markets are down. I believe I believe they are down because the market was stretched to the upside. The media will speak about North Korea and the crisis in North Korea, but I believe this market was due, and my indicators were indicating that we're due for a sell off or even a minor correction over the next couple of trading sessions. Will this minor correction turn into something stronger and something major? We don't know at this point in time. That is why it's good to be careful. It's good to really tighten up your stop losses under some of your stocks. Thank you very much for listening. It will be interesting to see what happens tomorrow. I hope you have a wonderful day. If you have a question for me, or you want a individual stock or whatever portfolio, bonds, whatever you have, you want it analyzed live on the show, you can send an email to info@smartinvestorcentral.com, info@smartinvestorcentral.com. Tomorrow is Friday, and I will be going over a lot of the questions that have been coming in. Friday will be just mostly doing question and answer on individual stocks, individual positions, and the markets in general. So info@smartinvestorcentral.com. If you like the video, hit a like. It will support the channel, and subscribe to the channel so you can get notifications whenever we post a video. As I said yesterday, the whole point of the channel is to provide an outlet for you guys to receive unbiased market information. Unbiased that focuses on what the prices are doing and not what the media and the media is saying. So thank you very much for listening. I like the encouraging thoughts that I get in the email. Keep it up. It gives me a boost. Thank you for listening, and I hope you have a wonderful day.